everyone. Keshav Kulor here, principal and co-founder of Clive Capital. I'm joined by my fellow principal and co-founder, John Lai,
Hi, everyone.
and our partner, Gary.
Hey everyone, how you guys doing?
Cool. Today's webinar is about our charitable deduction opportunity. If you have any questions in the meantime, just feel free to throw it in the Q&A or the chat and we'll address them as we go. This is for a leveraged charitable contribution opportunity presented to you by Clive Capital. We ask that you not share this with others and ask your spouse, CPA, any other decision makers in your life that you might run this by to do the same. It is available to Clive Capital investors only at the moment. Sharing this hurts our own ability to reduce our own taxes as these donations are limited in availability. Starting next year, we could explore branching it out, but for this year, given we only have a month left, he has a lot of referral partners that bring him a lot of business, including attorneys who clear 7-8 figures, other business people. We just want to put our own oxygen masks on first before we help others. So just keep it to yourself. It's not shared with others for the time being. The agenda today is to review current tax law, like what allows us to do this? Why is it so powerful? How can we utilize this without getting in trouble with the IRS? What is the leveraged charitable contribution? How does it work? Risk mitigation and case studies, next steps, and frequently asked questions. Quick disclaimer, we're not tax advisors or CPAs. Gary, you are a tax preparer, but we're not lawyers. It's for educational purposes only. As always, please consult your own advisors in your lives to make these decisions and run it by them first. Current tax laws. Average tax burden. A lot of us here on this call, you're all existing Clive Capital investors. And so, my background at Meta, John's background at Amazon, other tech companies. A lot of you probably live in high tax states, namely, or New York. Some of you are lucky and you live in Washington state where there's not as many taxes. At the high end of the income, you're paying up to 40%, if not higher, when you combine state, local, and federal taxes. Sometimes our best returns might not be in real estate or in the stock market. It could just be in tax savings. So traditionally, W-2 earners, 32 to 37% at your top tax bracket on federal, and then additional 5 to 10% on state and local taxes. So here we just have a sample analysis of a $200,000 gross salary. You lose $64,000 of that to federal taxes. That's at the top tax bracket, and then an additional 20% in state and local taxes. You are paying a lot out of pocket. You can shelter up to 60% of your income via charitable contributions. So for today's presentation, this particular strategy, we're going to be focusing on sheltering up to 50% of our charitable contributions. So this is per IRS tax code section 170C. And we walk through the different limits right here. So 60% limit is cash contributions or cash equivalents. 50% limit is for non-cash contributions, and 30% limit is for non-cash contributions, which typically has capital gains, which are not reduced for appreciation. So 30%, to walk through some examples, 30% could be donating stocks, it could be donating land. That's where 30% limitations typically fall. 50% limit is for opportunities like today. 60% limit is for cash contributions or cash equivalents. So I've seen other charitable contributions out there that utilize gift cards, and that's how they get up to 60% limit. People have different ways of utilizing these, but for edification purposes, we want to pay our fair share to Uncle Sam, fair in quotes, but we want you to do so without having to pay $1 for every $1 that you wish to deduct. And so that's where today's strategy comes into place. What if you could magnify your charitable contribution legally to shelter up to 50% of your adjusted gross income from taxes, so that every dollar you contribute receives a $10 deduction on your tax return? I will clarify that $10 deduction does not include reasonable appraisal fees, which cost a little extra. Not too much. It still definitely makes sense to do, but just a footnote. You can do so by using leveraged charitable contributions. What is a leveraged charitable contribution? By contributing to a qualified charitable organization, QCO, the taxpayer, you, the donor, will be assigned goods which need to be appraised by a third-party appraiser. This appraisal is submitted as proof of contribution to the qualified charitable organization, and the fair market value of the assigned goods are included as an itemized deduction. So the value of those assigned goods, the fair market value of what you donate, cannot exceed 50% of your taxpayers' AGI. and any contribution in excess of 50%, if you, for whatever reason, it's always a balancing act of trying to get the number right. If you overestimate it for whatever reason, you can carry it up to 5 years as an itemized deduction. So the 5-step process here is qualified charitable organization receives donations or purchases goods. So in this case, Gary, if you want to walk through what are we donating here? How are you getting your hands on it for so cheap? And then how are we able to get a 10x write-off?
Absolutely. So we have Fanaticals Distribution LLC. That's our for-profit. And that is what's sourcing the deals. I've built relationships over time that's got me into Marble and Dark Horse and private collections and stuff like that. Just the simple part of it is we're finding a corporation or a person that's got a lot of money that's been sitting on stuff for a while. And for whatever reason, it's time for them to move. I was just at Disney Studios a couple of days ago. They got Marvel upstairs above the archive office, and Marvel is focusing on billion-dollar movies. They're not focusing on the $44 million deal I just did with them. It's a lot of money to me. It's not a lot of money to them. They're happy to get me that merchandise for us to do this for Clive Capital and everything that we're doing. And they don't need the tax write-off. They'll just take the small dollar amount for it. And so I can pass the savings on to you guys. So Fanaticals Distribution sources that deal. Folks like yourself purchase that. We donate it to fanaticals.org, which is the nonprofit. And that allows me to, we're a support ministry, or support charities. That allows me to help other charities. I have the warehouses, I have the guys, I have the forklifts, I have all that on your side. It's a paperwork transaction for everything the IRS needs, everything your tax preparer needs. And this is our main way that we fund our product. We're a nonprofit that never asks anybody for money. You can't just straight donate to us. We'll do a deal like this. I should probably say also in the beginning, when you said not to share this with others, one of the things we do, I can't guarantee that the stuff I get you is going to appraise it where we need it to. But I can guarantee that if it comes up short, I'll make up the difference. My wife and I will make up the difference. So every referral partner I have, everybody, in case you have a John bring on, I may be partnering with as in adding to your donation to get you to that 10X. And that's one of the main reasons on my side why we're not sharing it out past this, because this is a little bit like fishing with a line. I got to know who you are. We don't cast a wide net. You're not going to see this advertised. It's referral basis only to do what we're doing. It's a simple process for when we're giving it to you. It's a little bit complicated with the warehouses and forklifts and relationships and stuff. And I honestly don't know that it's probably real duplicatable. So I had some suppliers here yesterday talking about another deal that we could do, which would be a Marvel size deal for next year, right? We locate stuff for this year and hopefully it's enough for what you guys need. And then I'm already looking for next year with the idea that once you've done it once, you're going to do it again.
And for more.
And for more. Yeah, that's typically, for more with whatever works within your income. I always tell folks, I don't have a pitch. I'll just tell you how it works. You can get the ins and outs, ask all the questions. We'll do the math, see what the math works out to be. And then from the math, we'll just move forward. First time out, you can use your credit card for paying for the stuff, and I'll cover the credit card fee in hopes that we're going to be doing business for quite some time to come.
And that's powerful because credit card companies offer protection against.
Once to a year, they'll protect you.
Yep.
Against that. It's the only other way I know to get you guys insurance on the program without you paying for the insurance. It's the credit card company.
Cool. So at a high level, Gary's buying, and we'll go through pictures later. Gary's buying comic books, collectibles, anything that's on.
A lot of the stuff behind me, this is Disney Park U signs over here. There's a collector's cabinet behind me, that Superman painting on the wall. If you guys are in the area, you got to come check out the warehouse.
Anyone's in the Bay Area, Gary.
It's a little bit like Toys R Us in the 90s with a ton of cool stuff.
Yeah, the warehouses are in Sacramento, so if anyone is interested, text me and we can make that visit happen. But yeah, basically Gary buys these collectibles, comic books, etc. at bulk and discount from these suppliers, these companies that don't want them anymore, gets them appraised at market value, which you could just go look at eBay or any other place where you'd be selling these, get comps like you would in real estate and say, hey, this item sold for this amount. And so that's why I'm going to say that my comic book is also worth that amount. And that's the deduction that I'm going to take. I might have bought it at 10 cents, but on eBay here, I see that other similar comic book sold for $1. So I can take that dollar deduction.
Yeah, you can get that. So it'll have adjusted cost basis. You'll get that appraised amount And that just works with contractual right in a partnership. So like the case law and legalities, contractual right goes all the way back to the Constitution. And so we're just following, which is probably, you mentioned some other write-off programs. We're probably all use the same thing, but that's the legal jargon that lets us do what we do.
So the process here is Gary's organization, Fanaticals, finds the goods, purchases them from Marvel, Disney, whoever their contact is. Taxpayer donates 1/10 of the price because that's what Gary's able to get it at. And then the QCO, Qualified Charitable Organization, assigns the value of 10x based on comps like this. An actual appraiser comes out, which is step 4. Taxpayer, the donor, you listening, hires a third-party appraiser to assess the value of the assigned property. And Gary, if you want to speak to the appraisal process and how that works.
Yeah. So we have one that we recommend. I can't say you have to use them, but I highly recommend that you use Daniel. He's got a rather intensive way of doing things. He's got carte blanche to come to the warehouses and just open boxes and take pictures and check and do whatever he needs to do. If somebody did a list for, let's say they needed 600 grand for 60 grand, they might be paying 60 grand, but there's $600,000 of merchandise. That could be 300-400 items. And just like you get an appraisal on one house, you get 3 to 5 comps for the one house. You got to do that on every item. So then sometimes the appraisal 15 pages long. Now pricing, we could give you a guesstimate, but that comes from Daniel. I can't get involved on that. I can recommend Daniel. My team can help Daniel as far as what the comic books are. Then he does the value. He does the appraisal. Him and I signed the 8283 for your tax repair. I sign, he signs, and then we get that with the appraisal to them.
Yep. And so the last step is that the appraiser remits Form 8283 to the donor, taxpayer, you, to submit with tax filing, and it would be counted under itemized deductions.
Absolutely.
So risk mitigation and case studies, we learned about this strategy last year. John did this strategy himself last year and got his refund. Another fund manager that we know in our network John, correct me if I'm wrong, donated $25K and got a $250K deduction. That came back just fine. And this is the first time many of you have probably heard about this. So let's get into why this isn't too good to be true, case studies, how we mitigate risk. So John, if you want to take over here.
Yeah, the first one is, it sounds too good to be true. It's probably because we have never heard of this type of strategy before. And so that's why it sounds too good to be true. It is part of IRS tax law, section 170C. 170C sanctions these types of contributions and deductions. So it's encoded in that IRS tax law. That's why you're able to do this. Program needs to be reviewed by a CPA. Yes, Gary has a tax attorney, a national recognized tax attorney, review this and supports this type of structure, that if the qualified donation program, we're good there. And the other thing to say about this is not the first time this is being done. I did it last year, as Keshav alluded to. And so it has worked. I did not get audited. Those others that I know of that have done this have not gotten audited as well. Section 170C limits contributions with capital appreciation to 30%. Again, you're submitting Form 8283, which shows the market value of those appraised items. So those assets will be coming from the qualified charitable contribution with that form, that appraisal, which shows the market value that can be written off. So you're submitting that on your itemized tax return. So that's why it's not subject to the 30%. Market value is that market value that you're submitting on the tax return. And then as a new strategy partner, Keshav alluded to this, but again, we've done this in the past ourselves. That mitigates some of the risk. The credit card also mitigates some of that risk as well. So first time you're doing it, Gary will pay the credit card fees. Obviously, credit card will provide protection against fraudulent activity that insulates you from some of the risk.
And on that credit card, I bank at Chase and I have a private merchant account guy, Roger, and he'll white glove the service on credit card. The larger dollar amounts sometimes get kicked back or whatever if your credit card's not used to it. So he's real user friendly on my side, and he's a completely separate guy than the private banking side. So he's just solely the merchant account.
And then Gary, how long have you been doing this specific strategy with Fanaticals, and then how long have you been doing charitable donations in general? If you could just walk through a little bit of your.
Charitable donations since 1997 when I started my tax business. Now, Fanaticals, we did a name change not too long ago from Saved by Grace Outreach to Fanaticals. I would say that we will do a strategy until the IRS changes it. Like in early days, it was cars. We could do a lot with cars. This has been going on for quite a few years. And the only change I've seen recently is 2026. They're going to cap the floor at 0.5%. This year, we're doing 10 times X. In 2026, it's going to be 9.5 times. And that's with the new tax law strategy that just came out. So this is probably going to be around for quite a few years, if that was the only change. And so 10 times is great, 9.5 times is still great. The leverage is still fantastic, but we've been doing this for quite a few years now, and it's been working great.
Great. So here, actually, John, go ahead.
Schedule A is an itemized tax return from 2024. And you can see the AGI here on line 2 is about 270,000. And then down at the bottom, gifts to charity is where you'll see that contribution, $5,000 and magnified to about 49,000. Gary pitched in the rest embedded in that cash balance on line 11. So to get to that 50K, it's magnified to 7.5x, 7.5x, primarily because of the appraisal fee. Now, as you contribute more and more, this is only $5,000 contribution. If you contribute 50,000, that 7.5x actually jumps up to about 8.5, almost to 9x. And it's primarily because the appraisal fee doesn't scale linearly. It's always around $12 to $2,000. So it doesn't scale, your magnification will increase to about 9x. Now, this is showing on an AGI of about 270. And so even with this AGI, you could have written off about 115,000 by just contributing 11,500, right? That would be a tax savings of about $28,000. If you have more AGI, you can contribute more up to that 50%, and that tax savings would just grow and magnify. Just know for this particular taxpayer, it's only going to be magnified a certain amount, primarily because he only contributed 5,000. If you contributed up to 11,000, he would have seen a 28,000 deduction in his tax return, reduction in his taxes rather. So it depends on your AGI. You can contribute up to 50% of that AGI, and then you only have to pay a tenth of that. And then this table will just show you what that magnification looks like. On the left-hand side, you'll see the salary. As you go up in salary, right, your taxes will go up steadily. It's the effective tax rate. And then what you have to actually pay, you can itemize those items. Now, if you employ this leverage charitable contribution strategy, you'll see that it would grow and the savings would grow over time. So you'll see on the right-hand column, savings over standard deduction, it'll grow as your salary grows, primarily because you can deduct more and more. Standard deduction is capped at a little over 30,000 for a married filing jointly. That's why you'll see it just magnify as the salary grows, and the percentage that you actually save over the standard deduction would magnify as well, depending on your salary and how much you contribute to this leverage charitable contribution strategy. And that's what the bottom says. It's essentially higher AGI, the more you save.
Okay. So next steps here is to attend any one-on-one follow-up calls with Keshav. I don't know why I just referred to myself in my first name. Anyway, myself, John, or Gary. Yeah, so Gary will be on all the calls to answer any questions that you have, because Gary's the subject matter expert here, and then John and I will be there. Once you decide to move forward, work with myself or John to fill out the non-binding intake form. It specifies how much you want to donate, what does your time look like around the donation, etc. And sign the engagement letter, paid through a credit card, as we discussed, or do a wire transfer. Receive the donation receipt from Fanaticals. Get the appraisal done. Receive signed documents necessary to file taxes, along with instructions for your tax preparer, your CPA, so that they know how to handle Form 8283. Then file your taxes and realize your tax savings. The timeline here is you have to donate by the end of the year from a tax perspective, but from a logistical perspective, it's always first come, first served. So if the charitable items run out, then, say it's December 15th, then you won't have the opportunity to donate. So I'll caveat it with that, number one. And then with number two is just logistics. If everyone decides to wait until December 28th, then we might not have enough time to
Right.
walk everyone through this process. So the sooner you get started with the process, the better, because high likelihood that inventory still exists to donate, and two, that we still have time, man hours left in the year to work with you through all of these next steps. And then lastly, as far as getting the appraisal done, you can get the appraisal done in 2026. It takes 1 to 2 weeks roughly. Correct, Gary?
You have up until October 15th of 2026, but should be predicated with when you file in taxes. If you're filing by April 15th, we need to let the appraiser know early in the year. If you file by October 15th, we have more time. Some of us are October 15th every year. Some of us are April 15th.
So budget a month before whenever you want to file your taxes
Yes.
and start the appraisal process then. And then the QR code here, if you scan it, just fill out the interest form. That helps us determine your income, and we can work with you to figure out what kind of deductions you should be looking at. If your income, your AGI is $1 million, then we can backtrack and say, hey, then you can donate up to $500,000 and it would still make sense for you.
Yeah. And if there were an overcalculation on that because you donated somewhere else and you forgot that the donation does carry forward 5 years.
Yep.
So nothing's lost.
Yeah. And other deductions might apply here as well. If some of you have invested into our oil and gas opportunity,
Yeah, there you go.
that reduces your AGI. If you have real estate depreciation or anything else, again, we're not CPAs, but these are just things to keep in mind to discuss with your CPA when you're looking at this strategy. So FAQs, you all probably have a lot. We'll run through a couple here, and then we'll walk you through the data room where I've included a more thorough FAQ document that has at least 30 plus questions in there and the answers to them. So question one, how's the qualified charitable organization able to obtain the assets at such a discounted price? And that's because of Gary's relationships with companies like Marvel and Disney. And well, that's part one. And then part two is that they're pivoting their business to focus on more profitable aspects, right? Like film production and things like that. And they just want to get these comics and collectibles off their books. Step number two, how does Clive Capital find the QCOs that it works with? As with all of our partners, it is through our networking, and we're constantly out there talking to different partners in the industry, different funds. Sometimes our investors will bring us people that they are looking at. And so Gary, we found through our network of fellow fund managers. And John heard about Gary last year, made the donation himself, saw that it was successful. And then I visited Gary for the first time, my wife and I, this August. We'll go through some of the warehouse pictures. And then again, about a week ago, grabbed lunch with Gary last Monday. So I explained how 50% deduction applies to an asset which has a fair market value different from its cost basis. So here, the big thing really is just, regardless of when you acquire the asset, it's what is its fair market value and what can you, if you were to sell it, what could you sell it for?
And you get fair market value because if I were writing it off, I'd get fair market value. So like you get my position in the deal, so through my partnerships. So that's how contractual rights to the partnership works. And that also helps with the seasoning period as well. Everything that we get is already seasoned.
Do QCOs take credit cards as a contribution or only cash? So here, at least, like Gary has offered graciously to take credit cards as payment.
Well, and once we know your people, I'm kind of old school. So cash and credit cards and crypto and gold and silver. And if you got a cool car, I'm pretty easy to work with. Like once we get past all that, I'm not real particular as long as we're all working together, making the world a better place.
Yeah. Okay. Will this work to reduce taxes for federal tax returns only or state and local taxes as well?
It's 100% federal, and then the states and local taxes, there's going to be some, they're just all different. And it's hard to pre-calculate those ahead of time. We did one this last year. I think it was Pennsylvania. And because we wrote off so much, the Pennsylvania return was less because there was a credit for higher income people in Pennsylvania than lower income. It made zero sense, but I think overall, your number is going to be greatly reduced.
So this is where speaking with your CPA makes sense.
Yes.
And Gary, if you want to talk about like your offer to file taxes for folks.
Yeah. So if you're doing this and you need help on your taxes, we offer those. We've had tax business since 1997. I do not actively look for new clients. The only new clients we take on are somebody who's doing the write-offs with us and then they need help. And then I become your strategist and your tax advisor in that situation. So everything else, we're a tax strategist. We got the disclaimer. If we're going to talk about doing that, and then if we're doing a contribution of, if you need $100,000 or more in write-off for $10,000 place point on that, then the tax prep is included. We won't charge you for that, and we'll just do it internally. But at the same time, if you have your people, I work really well with them. So if you have your CPA and you like them, I'm not saying by any means switch. I'm only talking to the folks who are maybe like, hey, you got to find something.
Yeah. So if you have your own CPA, discuss with them. If not, Gary is happy to work with you. And if not that too, we have other CPAs we're happy to introduce you to.
We'll find you the right person, but I'm available as well.
Yep. So here, when should I initiate my charitable contribution? Again, deadline technically.
I have a short answer that's always yesterday. We're going to run out of time. So, so as soon as possible, to at least get the process started so I know to earmark it.
And again, you can always, it's not binding, but it just lets us know to save a spot.
Right. It's just, it's, a little bit like, hey, I'm going to need this much. Okay, great. I still have that much. Okay, now we can proceed forward.
Yep.
We don't want it to be December 18th to find out that it's gone.
Yeah. So we're going to include just our typical links to our educational resources, the ebook, our YouTube, our podcast here as well. But that concludes the the presentation part of it. Now we'll go into the data room. You should have all received a link to this data room just to walk you through what you can expect. We have the legal documents, the organization documents for Fanaticals. We have included that in here. Articles of incorporation, incorporating the state of Wyoming, certificate of existence, EIN,
and letter. Did we give you that's all saved by, there we go. We gave you the transition letter when we did the legal name change, yes?
So this is the name change that Gary recently did from previous name of Saved by Grace Outreach to now Fanaticals. That's the legal folder. The presentations folder is for the pitch deck. The process documents folder has the donation appraisal process and writing. This is a sample redacted appraisal agreement and costs $1,650 to appraise 132 items. Here's the appraisal report, also redacted, like Gary was mentioning, 15-page report on the fair market value of the donated items. So this is all in the data room. I'm just walking you through where you can find all of these documents. These are tax documents. What we shared in the presentation, here's the full document. It's a Form 8283, which is what you'll give your CPA to file with your taxes that show your fair market value for $47,000. In addition to that, warehouse tours, Gary and team included a bunch of pictures here from their end. These are the kinds of things that we're talking about when we talk about comics, collectibles, anything that's fun.
And the dinosaurs are at the ranch.
These are the pallets that Gary's mentioning. So just comic books, collectibles, everything in these boxes. This is one of the warehouses. Here are pictures from when I visited Gary at his warehouse in August. You will see me and Gary chatting. Me admiring Yoda.
Yoda's back there. Those guys are at the ranch now.
Living out in Jurassic.
One of them took some damage from an animal.
Uh-oh.
Yeah. We'll figure it out.
This is Dark Horse, the comic book company. Looking at inventory. Let's see. There's a picture of me playing Terminator here somewhere.
Oh, yeah. You got to get Terminator. I picked up some more games since you've been here, too.
Oh, nice.
Yeah.
Here's me playing Terminator and saving humanity from cyborgs.
Hey, it's worth coming by just to play Terminator because that's $3, $4 a game at the bowling alley, and you can get through the whole thing here for free.
Monopoly, because we know we love real estate. Batman. Let's see. Yeah. So getting friendly with the dinosaur. So all these pictures are in here, and we'll walk through the rest of the documents. But this is part of the due diligence that we do, right? Especially with these strategies that are more niche. Go visit our prospective business partner in person, verify what's what. Here is the statement from the tax attorney, Christina Leal. And
Christina is my number one referral partner. She refers me a ton of business. She went through her master's class, which is great. So her and I could talk at a tax level that most people don't understand. Once we got through all this, however many years ago that was, she started sending her people, and her people are primarily attorneys. But yeah, so that is from a person that was not paid for. She just, this is what I send my people.
yep. And so, Gary, if folks want to reach out to her, you will have to pay for her time or enlist her to file your.
Yeah, we would probably have to set that up through the team on this side. Her and I work with the liaison between the two of us. She's a little hard to get a hold of.
Yeah.
And I don't know her rate.
Yep.
I've never paid the attorney fee. I just pay her the referral.
Yeah. And then here's just an overview of the opportunity. And this is the business address here, 3939 West Capitol Avenue, Suites D, E, and G. If any of you are in the Bay Area or even want to fly out to visit Gary, reach out to John or myself. We're happy to work with you.
We'll figure it out.
Yeah, you guys can play Terminator yourselves.
2-player game.
And then here's the list of FAQs. This is a living document. This is a new strategy for us as well. We're continuing to add to this as our investors send more questions. Check this out before you have any questions for us. But if your question's not answered here, please reach out and we'll make sure that we get you any information that you need. Beyond that, next steps here, let us know you're interested, attend follow-up calls for any additional questions you have, sign the engagement letter, initiate your payment, receive the donation receipt, get the appraisal done about a month before you want to file your taxes, but the sooner the better. Receive the documents you need, Form 8283, other documents, instructions for your tax prepare, and then file your taxes and realize your tax savings. So as with all investment opportunities, this is a donation, so nice, okay, investment opportunity. If you reach out to John or myself, email, text, call, Zoom call, we'll get your questions answered. And we'll hop on a call with Gary if we need to. It's just so you guys can get additional comfort. For those of you who are happy to make the trip out to Sacramento, if you want to do that, then also let John or myself know. We can coordinate with Gary's team regarding that. And beyond that, next steps is just reaching out and saying, hi, hey, I'm interested, or filling out the soft commit form at the QR code that we have linked. So, if nothing else, that wraps it up for the Charitable Deduction webinar. Again, you have the data room, so please take a look through all of that. Reach out with any questions. Please keep this opportunity to yourself, as it is very limited this year. Maybe next year we'll look at expanding it, but not this year. So with that, thank you for joining today's webinar, and we'll send this recording out, data room, everything. We'll look forward to working with you all. Thanks, everyone. Bye.